Okay, I'd like to thank everybody for coming. I'm Mike Johannes. I'm the chair of the finance department. I'm not going to stand up here for too long. I just want to thank Ray for coming. It's wonderful to have one of the 5 greatest investors of the last, 40 or 50 years here. And hopefully, one of you out there will be one of the greatest investors of the next 40 years. I'd like to introduce Michael Kubin, who was able to coordinate to make this all happen.
Thank you. Good afternoon. We are in for a treat on this rainy day. My name is Michael Kubin, Columbia Journalism Class of 05. My job today is to introduce 2 people that really don't need any introduction to this audience, but then I thought everybody really deserves an introduction. It's kind of silly not to introduce people, but what is silly is to tell you all stuff that you already know about them. So I'm going to use my brief time to just tell you a couple of personal observations about Brian and Ray. Brian is going to be interviewing Ray. So you all know Professor Lancaster well, since you elected him your Professor of the Year. Brian and I have been friends for over 25 years. Here's the thing about Brian that you want to know. If you ask him a complex question, he's going to give you an answer that's thoughtful and complete and considers all points of view and describes the pros and cons and delves into second and third level aspects that you never even thought of. He has a remarkable ability to transmit his knowledge to you. He is a walking Wikipedia. And he's also the genesis of this program, so the reason we're here today is Professor Lancaster. Now, a little bit about Ray. You all know Ray Dalio, founder of Bridgewater Associates, the world's biggest hedge fund. You know him through his books, articles, LinkedIn, CNBC, Twitter, for some reason known as X. He's everywhere. I met Ray when we were second-year students at Harvard Business School, or some of you call it the Columbia of Cambridge. So I've known Ray for over half a century. I want to give you a little perspective of what business school was like when we were there. Of course, we had no internet, no laptops, no iPads, no cell phones, no email, no Wi-Fi, no instant messaging, and of course, no artificial intelligence. And calculators, which were called 4-function calculators, had just been introduced, but we couldn't use them in exams because not everyone could afford them. We did have spreadsheets, but the spreadsheets were made of paper. That's why spreadsheets are called spreadsheets. Every cell had to be filled in by hand. You add up the columns and the rows manually, a real nightmare. But I mention this because Ray got his business education in that very rudimentary environment. And yet he went on to found and build, using principles he developed, the most successful company in arguably the world's most competitive technology-dependent industry. And I think we can all agree that's pretty amazing. So ladies and gentlemen, Brian and Ray.
Thank you, Michael. Thank you, Ray, for coming here. As you can see from the audience, we were, everyone is so excited to hear from you. When we put the registration up, I don't know if Michael mentioned to you, at 11 o'clock a couple of weeks ago, within 30 seconds it was sold out, so it was really impressive.
Well, thank everybody for being here, and I can only disappoint, so.
Great, okay. I just wanted, in most of your career, you were pretty private. But in the last number of years, as Michael said, you've been on, the press, TV. You're here, which we're really thrilled about. So what was it that changed your view to come out and start speaking more publicly about what you've done, things like that? What are your thoughts?
I view life as transpiring in phases, and maybe 3 big phases. The first phase is you're dependent on others, your parents, you learn. Then you come out to the real world and you try to be successful, and you learn. And then you go on to the third phase in life, where that transition creates an instinctual desire to pass along what you learn, because we all build on each other's knowledge. And so it's a great pleasure. The reason I'm here is because I can imagine being in their seats. And I think about what's ahead, and for me, it's very exciting to be able to, exchange thoughts, because what you're going to go through is probably a lot of what I went through.
Great.
So it's an excitement.
Yeah, that's absolutely wonderful. And by the way, towards the end, we'll allow questions, maybe 15 or 20 minutes for everybody. What I wanted to start the conversation with is looking at sort of some of your big picture thoughts. And so what we'd like to do, if Steve would run the video one, and it's an excerpt, about a 4-minute excerpt or animation
Yep.
of your dealing with the changing world order.
Yeah, if I may, just
yes,
introduce a bit. It's always been important for me, especially now, to try to communicate clearly. And I found animation to be very effective as well as the books. And there is a big cycle we're going to talk about that only if you study it over hundreds of years can you actually see the nature of this cycle. And we're in a big cycle. And so I did this 40-minute video. It's called The Changing World Order, and it corresponds with the book I wrote called The Changing World Order. But this is a 4-minute clip that tries to get it down to 4 minutes, what that big cycle looks like.
Yeah. It's very exciting. And I think that's one of the most compelling things I find about your investment style is that having lived through, we were just talking about this before in 2006, and people are just totally oblivious of what's going on around them. And what I think is so impressive about you is how you study the big picture, the cycles, and you can sort of see some of those turning points. But anyway, if Steve, if you could run the video one, please.
I studied the 10 most powerful empires over the last 500 years and the last 3 reserve currencies. It took me through the rise and decline of the Dutch Empire and the guilder, the British Empire and the pound, the rise and early decline in the United States Empire and the dollar, and the decline and rise of the Chinese Empire and its currencies, as well as the rise and decline of the Spanish, German, French, Indian, Japanese, Russian, and Ottoman empires, along with their significant conflicts, as measured in this chart. To understand China's patterns better, I also studied the rise and fall of Chinese dynasties and their monies back to the year 600. Because looking at all these measures at once can be confusing, I'll focus on the 4 most important ones: the Dutch, British, US, and Chinese. You'll quickly notice the pattern. Now let's simplify the form a bit. As you can see, they transpired in overlapping cycles that lasted about 250 years, with 10 to 20-year transition periods between them. Typically, these transitions have been periods of great conflict because leading powers don't decline without a fight. So how am I measuring an empire's power? In this study, I used 8 metrics. Each country's measure of total power is derived by averaging them together. They are education, inventiveness and technology development, competitiveness in global markets, economic output, share of world trade, military strength, the power of their financial center for capital markets, and the strength of their currency as a reserve currency. Because these powers are measurable, we can see how strong each country is now, was in the past, and whether they're rising or declining. By examining the sequences from many countries, we can see how a typical cycle transpires. And because the wiggles can be confusing, we can simplify it a bit to focus on the pattern of cause-effect relationships that drive the rise and decline of a typical empire. As you can see, better education typically leads to increased innovation and technology development, and with a lag, the establishment of the currency as a reserve currency. You can also see that these forces then declined in a similar order, reinforcing each other's decline. Let's now look at the typical sequence of events going on inside a country that produces these rises and declines. In a nutshell, the big cycle typically begins after a major conflict, often a war, establishes the new leading power and the new world order. Because no one wants to challenge this power, a period of peace and prosperity typically follows. As people get used to this peace and prosperity, they increasingly bet on it continuing. They borrow money to do that, which eventually leads to a financial bubble. The empire's share of trade grows, and when most transactions are conducted in its currency, it becomes a reserve currency, which leads to even more borrowing. At the same time, this increased prosperity distributes wealth unevenly, so the wealth gap typically grows between the rich haves and the poor have-nots. Eventually, the financial bubble bursts, which leads to the printing of money and increased internal conflict between the rich and the poor, which leads to some form of revolution to redistribute wealth. This can happen peacefully or as a civil war. While the empire struggles with this internal conflict, its power diminishes relative to external rival powers on the rise. When a new rising power gets strong enough to compete with the dominant power that is having domestic breakdowns, external conflicts, most typically wars, take place. Out of these internal and external wars come new winners and losers. Then the winners get together to create the new world order, and the cycle begins again.
Great,
That's
thank
the
you.
best I could do in 4 minutes, but it's a lot more complicated now.
Yeah, so given that, I just wanted, I thought that was a great way to try to get everyone up to speed on the book if they haven't read it yet. So where would you say, given your sense of cycles, where are we in the US today? Do you see it in that process?
I'd like to describe that there are 5 main forces that we see repeat over those times, those were indicators of power, but the 5 main forces are, there's the debt, money, economy force. How much can you increase debt? How does the mechanics of that work? I'm a financial guy, and we're here as we live in that world, so we can talk about the mechanics of that.
Yes.
The second is the internal political force, which there's a cycle of cooperation and confrontation. When there's large wealth and values gaps, we see much greater populism and extremism, in which each side says, fight for me, and the idea of compromising doesn't, and working well together becomes a problem politically, and we see that becomes worse and worse. So that force, with the debt force, is happening. We can see the political nature, that populism of the extreme and how it's working is very much with us. And the last time that happened, you'd have to go back to the 1930 to 45 period. Number 3 is the geopolitical conflict, the great powers conflict. Graham Allison described the Thucydides trap. In other words, there's an order that described here. When you have a winner of a war, they set the rules. So in 1945, the United States won the war, was the dominant power. That's why the United Nations is in New York, and the World Bank and the IMF are in Washington, D.C. The dollar is the world's reserve currency, and we got a monopoly on military power. And then there's a cycle where there's others rising, described there. So the third is that great power conflict. Have I lost my mind?
Yeah.
I have. Okay. Can somebody help me with that? Sorry. I could just talk this way. I'll hold it.
That's easier until we
Does that
get
work?
somebody.
Does that work? Can you hear me?
I think,
Okay.
you can hear in the back okay? I think they're good.
So the debt money one, the internal conflict one, particularly over wealth and values and politically, Number 3 is the external, who is in control, what are the rules of the game. Number 4, throughout history, even more important than the first 3, is acts of nature, drought, floods, and pandemics, have killed more people than wars, have toppled more orders than these other items. And certainly today, climate is a big one. So we should talk about the debt one. We have the internal political one. Number 3, we have the geopolitical one. Number 4, we certainly have the acts of nature one. And number 5 is throughout history, man's inventiveness, particularly of new technologies, has had revolutionary effects. And certainly that is a factor today in an almost unparalleled way. And then when you see the story repeat over and over, what you see is that how they interact. When you line them up and how they interact, they create the great cycle. So for example, when you have a lot of, let's say, debt and vulnerabilities, and you have a political conflict and an external conflict, and the same time as you have climate disruptions or costs, we have big costs. It's estimated that the climate issue is going to cost us $8 trillion a year, which is 8% of world GDP. And then we deal with the technology. We're in that kind of transition. So when we talk, I think when we talk about anything, it falls into any one of those categories. Everything important falls into one of those categories, and they relate to each other.
Yeah. In terms of the debt, I know you've written extensively on that. What kind of implication, given where we are right now, it seems like Republicans cut taxes and increase the debt, and Democrats spend money, increase the debt, and the debt just keeps going up and up and up. Where do you see that heading, and what impact do you see of that having on the economy in the next few years, in terms of interest rates, employment, growth?
The beautiful thing about studying history and so on doesn't mean that history is necessarily going to repeat, but everything that happens has causes that make it happen. And so you could see the cause-effect relationship. So when we deal with the question of how much debt is too much debt, there are mechanical issues that determine that. So there's a debt asset and a debt liability. One man's asset is the other man's liability. You're holding the bonds to lend to somebody else. So that means that interest rates have got to be high enough that for the creditor, but not too high for the debtor. And when you have that rise, that balancing act becomes more and more difficult. So there's mechanics behind this. So what you have is as your debt rises relative to your income, naturally your debt service payments rise relative to your income. And if you have interest rates rise relative to that, the debt service payments rise at a faster rate. And the government is always the one of last resort. So what we saw through COVID and what we're seeing now is the government being of last resort and the central bank going in and buying that debt. So if you take the government's numbers and its deficit, we are almost out of discretionary spending ability because we have commitments for social programs, many different things. And so that debt service payment is going to start to produce a squeeze. That means, do you pay less? Or do you tax more? Or do you borrow more and print it? And so there's a curve that you enter into mechanistically in which the debt service payments compound and accelerate to create a squeeze. That's the first of the drivers. But what happens in that process is the second driver is, do you want to hold the bonds? We think of the supply and demand for credit as being how much new bonds have to be sold and how much will they be bought by the buyers. And that's going to be a challenge. But when you get to the situation where they might want to sell their debt, You know, let's say we have in the government $34 trillion of debt. If you get to that dynamic, and that's the dynamic to watch, where they're selling, that increment of the debt selling to fund the deficits becomes even minor, and it becomes very large. Then the central bank is in a position of what do? They could either let the balance clear. If they let the balance clear and don't print money and come in, then the interest rates are going to go through the roof because it has to ration new credit. And so that causes a terrible disaster. And so throughout history, they always give in. It depends how long it takes. Like the reason we had the Great Depression is from 1929, it took to 33, and then they printed money.
Right.
And so we know in the end they will do that they will print money. So that dynamic, as we start to carry through, that squeeze begins to accelerate. And the key question is, when does it take people selling those bonds?
Right.
And that's a real interesting question because throughout history, always the temptation is the interest rate. And we tend to look at interest rates in historical context. Are they high enough? But not taking that consideration. So in history, since 1700, there have been about 750 currencies. A currency is an interest rate, is a debt instrument. There have been 750. Only 20% of those currencies still exist, and those 20% of the currencies have all been dramatically devalued. So the answer is you cannot continue this with that. I mean, it would be so great if it was, wouldn't that be terrific?
Right.
But it's
we're
not
living
like
that way, right? Do you have a call on how many years this is? Is it 1 year, 5 years, 10 years? You see this
I think
happening?
that I think sometime within the next 3 years, we're going to see some form of a crisis pertaining to this.
Wow.
Now, the question also becomes some of the other issues. So if I take the geopolitical issue,
I want to talk about China for sure, yeah.
and China and the world, there are things going on in which maybe foreigners do not want to buy the bonds. There's worries about sanctions. There's this geopolitical. When the geopolitical takes hold, the question is even what is a storehold of value? So we have the political. The political will be very important. If we get into what would Trump's policy be, what would Biden's policy be? They all have policies of spending more and not taxing enough to bring that. So you're going to have this dynamic. So all of those pieces come together, I think.
Yeah. Where do you see, speaking about China a little bit, where do you see China in this cycle? And then I know you met with Xi Jinping, talked with him, had dinner with him. So where do you see China in this cycle? And
I've been very lucky because I started going to China in 1984, and they didn't have anything. And then I loved the relationships. It was an interesting place, and and then I helped them build a lot of their economy and built friendships. And then we found ourselves about 4 years ago in the middle of this fight. Ooh, okay. So, and I know it, and I know it, and how they think very closely. Mm-hmm. And they're going through their crisis. Xi Jinping said, there's a 100-year storm on the horizon. And they are entering this 100-year storm. So if I go down their list, what they had is they had a debt bubble with the real estate, okay? And they are dealing with that. They have to do a debt restructuring. So 70% of their savings was in real estate. 20% of their economy was in real estate. So they losing money, the person and the banks and everything get squeezed by that. The second thing is then their stock market goes down. So everybody, and their salaries are going down. So that you're having this big wealth effect, and that's negative. The internal control issues. Okay, now you have a different approach. In one case, like they would believe capitalism and the chaos that you're going to produce from your political system will get out of control, and you don't have order. That's what they would say about the United States. And then you get the opposite extreme, which is an autocratic, almost dictatorial type of system. Both have their real problems. Both are difficult. And so when you take the dictatorial type of problems and so on, in doing that, that's creating a fear and a control element. And that at the same time is that the conflict with the West is also creating a great fear. So if you're Chinese and let's say, or if you're a foreign investor going in China, or you're a Chinese being in China, you don't know which side's going to get you. So it's almost, so now you're seeing movement of businesses outside of China. So to other countries. By the way, that benefits other countries, benefits India, Vietnam and other countries and so on. So that's a problem. Yeah. And so you're seeing the same dynamic. And so if you look at Chinese history, very interesting. I'm just going to touch on almost 200 years of Chinese history in a few seconds.
Sure.
1840, they were on top of the world. The foreign powers come in. They have what they call the 100 years of humiliation. The foreign powers come in, opium wars, they get taken over. Taiwan gets taken by the Japanese and so on. Then they have the same cycle. They have a world war, and then they have a civil war. And then after that, that's their 100 years, that's the 100-year mark that he's referring to. And then they have the Mao comes in, creates a dictatorial, lack of free market, Deng Xiaoping brings in capitalism, free market and open, and then you have this boom. When I started going there in 1984, since then, per capita income has increased by 29 times. The life expectancy has increased by 10 years. Poverty rate goes from 88% to less than 1%. And you have that. And then you have a bubble, just like that's describing. Everybody, and the classic is a real estate bubble. So you have what are they going to save in? They buy real estate. They think it's tangible. You create a real estate bubble. And then you have the wealth gaps, very big wealth gaps in China, okay? Because capitalism is inclined to overdo it with wealth gaps. And then you have that dynamic. So that's where China is today.
Yeah, and it's also, people, I don't think have talked enough about the banks. I know, having lived through 2006 and 7, when we had a lot of problems in our own real estate bubble, banks
By the way,
they didn't mark to market. They didn't have, and I wonder with Chinese banks, I mean, how could they be solvent?
It's the same thing happens.
Exactly.
It's timeless and universal. The dynamic is timeless and universal.
Yeah.
By the way, if you're interested, I wrote a piece on China just recently, 2 pieces on LinkedIn. You can get it on LinkedIn. It's more comprehensive.
So under the circumstances, we have an election coming up. I'm not going to ask you to give odds to who's going to win, but what advice would you give President Biden? You've given a lot of advice to secretaries of the Treasury, other presidents. What advice would you give to him right now in terms of China, in terms of debt printing, what's going on in the country, where you see we are in the cycles? What do we need to do?
There's a lot of
It's inevitable. We're just going to, head down here, or what could be done?
Well, I'll start with what I think should be done. We now are in an environment in which the polarity and the not accepting, losing, pick a side, fight for it, and win at all cost, including questioning the system and win at all cost, is something that is ruinous, threatening to ruin us. We need, in my opinion, a strong middle. And how do you represent a strong middle? And both of the sides are split between conservatives and so on. So if you go to the extremes of the Democratic Party as well as the Republican Party, so who represents the Democratic Party, and how do you speak beyond that is going to be a particularly important question for Biden and the Democrats. How do you think beyond Joe Biden? What is the Democratic Party? How do you know what it represents? Mm-hmm. And then there's the Republican Party with its populism. So, if I was, we need a strong middle, is what I believe. And then I think we need lots of reforms. I think we need reforms so that the country works well for most people. So if you don't have equal opportunity or approaching equal opportunity, and it's not working for a lot of people, you have to find the way that the system's going to work for a lot of people. Right. So I would say, if I were him, I would, but I'm being theoretical, I would have almost a bipartisan cabinet. I mean, how do you go? I would do whatever it is that's going to bring us to the middle, and I would say, if I was president, I'd have to be president of all the people rather than one side in a fight against the other. And then I would, a bipartisan cabinet, and then I would get smart people. I'd have a convention of sorts, like a Manhattan Project type of exercise, in which, with engineering, we deal with these issues. Now, how you deal with the debt issue, in some form or another, we're going to have a beautiful deleveraging. In one way, history shows us how to do that. But you're going to have a bringing down the debt burdens in a certain way that is not disruptive.
You mean to the government debt burden or individual? Yes.
Okay.
Right.
And so you have to do it and you have to get, how do we work well together, and you have to make reforms. This is a lot to ask, okay? But I do feel that neither side is going to accept the other side. If Biden wins the election, I have questions. We'll see. I hope that we can then get through that well in terms of who is in control. And then there's an issue of nationalism versus the states' rights. We're going to have to go through all of that. So it really is, how do you create a really bipartisan middle, strong middle that beats the extremes, in my opinion.
Yeah. No, and I mean, watching the cycle view and reading your book, I mean, the pressures and the inequalities that we have, I think that's a lot of what I think is being manifested in the political parties. Why are you getting extremes? Charging the Capitol and BLM movements are almost like, two sides of the same coin in a way. People are just frustrated and sort of left out of the center of power.
And it's not much. If you look at history, what do people need? And you look at successful societies, you only need these simple things. Ideally, a parent or two who's taking good care of you and raise you well, a good education system that also teaches civility, how to work well with people. And then you come out to a country that has equal opportunity, as equal as we possibly can, and then allows productivity because we finance it. You don't need much. I was lucky that I had those things. Any of us in this audience are lucky if we have those things. We have to have those things. And if we don't, then we have mental illness, crime. We have some of the things that we're seeing become increasingly pervasive.
Can I ask you about any investment current themes you might have?
I'm sorry?
Could I ask you about any your thoughts, given all of this, I don't want any specifics, but in terms of, I see everyone running out of here. But in terms of, where do you think, the stock market's going? Can you opine on that, or bonds, or should be in bonds,
Sure,
should be in
sure.
stocks? Or I don't want to get too specific.
Sure. And I also want to make sure that more than passing along conclusions, it's like, I don't want to give a man the fish. I want to teach
Yes,
them
and
the fish.
I want to talk about your
I want
investment
to
process later.
understand what
Yeah.
the cause-effect relationships are that are
Yes.
behind my conclusions.
Yes.
And so one of the things that I learned from making a big mistake was the importance of effective diversification. So my mantra for investing is to have 15 or more good uncorrelated bets, return streams, okay? So, because no matter what, the day's going to come along that when you have a concentrated bet and you're wrong, you're going to pay for it. So, so first of all, how do you have the 15 uncorrelated bets? Then you have to realize you can't look at the stock market. You have to get granular. What is the stock market? It's just a bunch of different things that are going in different directions. If you were to say commercial real estate, you would be in the tank.
Right.
If you say artificial intelligence related company, you're through the moon, okay? So you have to begin to think about where is your edge in being able to pick some things, okay? And then you have to think about where. I do believe global is good, okay? So I'm a global macro investor. I look at a lot of countries. I think there's environments. What I want in investments are certain three basic things and where I'm going to invest. Are they earning more than they are spending? Do they have good income statements and balance sheets? And I do that when I think about countries, because you'll pay. Do it. Internal conflict. Are they orderly and operating efficiently in a healthy, competitive environment? And do they have order, or do they have disorder? And number three, are they at risk of a war, an international war? And then I look at other measures of health. I put out, and you can go online, I give it away, an assessment of each country through statistics, level of indebtedness, and I look for the bright spots. Okay, there are bright spots in this world. The world looks different, very different depending on where you're sitting. And so as you looked at places like the ASEAN region, okay, if I'm in Singapore and I'm looking at Indonesia and Philippines and Vietnam and so on, or I look at India, or I look at parts of the Gulf countries, the Emirates, Saudi, and these places. Or then you look at the dynamics, how offshoring has benefited Mexico in terms of then exporting into the United States because of the nature of the dynamic. I look at those things to take those. So I would say diversification, know the basics of what that environment is going to be, including the issue of taxation, tariffs, those kinds of things. So the places that I don't like bonds, okay? It's going to take a long time. So if I take a bond yield, okay, simple way of how do I look at a bond? Take an inflation rate. You could pick the number. A low estimate would be 2.5% here, and a higher estimate could be 3.5%. But let's call it 2.5. Let's call it 3. Then you need a real return. You need a 2% or so real return. I think it's riskier than that because you may have this supply-demand problem that is down the road.
Right.
So if you just took a stable, you didn't consider the supply-demand problem.
Right.
You were just looking at those numbers. You'd say, okay, 2.5 plus 2 is 4.5. 2.5 plus 3 plus 2, okay, is 5. Okay, on that normal. And so I start to look at the bond market. And right now we have a big easing built into the curve. Like, okay, there shouldn't be this big easing in there, all things considered.
Right.
And then we got this big debt thing going on. Like, I don't want to own debt. okay? Because I think that that's a problem longer term, okay?
Yeah.
And so that gives you a sense of how I look at the world.
Right. No, I'm with you totally on the debt issue. I mean, the simple math, and then you have all this money printing and the extra, the deficit exploding. It is very, very concerning. Of course, it's hard to be in equities if you think that the stock market's going to, I mean, if the debt market's going to blow up too with it rates. You mentioned Saudi Arabia.
And I think you have to pay a little bit of attention to gold.
Yeah. Okay.
Okay? Because gold is I'm not saying a big thing, and gold is an overlay, because if you look at history and you understand the nature of the value of money, it's a negatively correlated, in big events, it's a negatively correlated asset, particularly in those environments. So if you're think about portfolio construction. The most important thing that you all, if you're becoming investors, that need to understand very well is portfolio construction. And that could be of betas, in other words, asset classes, or it could be of alphas, but you have to have that portfolio. And so as you get acquainted with that, that'll help you to create the better diversification.
Great. I wanted to shift the conversation a little bit now to your career, since we've had several hundred MBAs sitting here and also in other rooms watching screenings. So how did a kid from Queens make it to the top? You're from Queens, right? On Long Island. And talk to a little bit about that and a little bit about how and why you started Bridgewater.
Okay. First of all, it's a great country of, I had two parents who loved me. I went to a public school. I came out to a world of equal opportunity. Everybody should have that, I believe. In my case, when I was a kid, I did odd jobs, and I caddied, and I earned money. And so when I was 12, the stock market was hot. Everybody was talking about it. So I bought a stock. Okay, here's my investment criteria. It was the only company I ever heard of that was selling for less than $5 a share. And I thought I could buy more shares, so if it went up, I'd earn more money. Stupid. But this company was about to go bankrupt, and another company acquired it. Northeast Airlines was its name, and it tripled. And I said, hey, this game is easy. And I figured, I looked at the Wall Street Journal and the New York Times, and there's all these names, and all I have to do is pick one or two that goes up, and oh, this game should be easy. So I started to get hooked on the game. I was hooked on the game.
How old
So
were
it
you?
would be like a video game, right? You get hooked on the game.
Yes.
And so I got hooked on the game. And so I played the game all along. And by the way, you're all going to go through your own versions, whatever your game is, whatever your career is, you're going to go play that game. You're probably going to come out of here very arrogant. You think, oh, I'm smart and so on. You really don't know very much. and when you come out, you're going to have to deal with reality, okay? And you play the game. Okay, so how good? If you approach it like that as a game, and you get hooked on the game, and you'll get better at the game, and you'll learn from mistakes. Value mistakes as teaching those. So anyway, that was the evolution. I made big mistakes. And they rivet like 82. I was,
Reverberate.
oh boy, and you learn.
Yeah.
And then what I realized, I learned humility. I learned fear of being wrong because of a mistake I made in 82.
Could you talk a little about the investment approach at Bridgewater? What's the process? Like, how did you decide to invest in X, or just talk a little bit about so what do you value? We were talking about that before we came down here. What are your values, philosophy? What guides you in your philosophy? How did you build Bridgewater into such a massive fund?
I was interested, I had my specialty I was interested in. I traded commodities. The reason I traded commodities because they had low margin requirements. So I figured if I was going to be right, I could make more money because of commodities. So I traded commodities. Interesting. And I got to understand the mechanics. And then what happened is the big movements in the markets happened, the global macro, and they would always trade over. So I knew I had to be global macro, okay? And then in 1982, in 1980, 81, 82, I calculated that, this is my big crash. I calculated that American banks had lent more money to other countries, particularly emerging countries, that wouldn't be able to pay back their debt. And that was and we were going to have a debt crisis. And that was a very controversial point of view. And in August of 82, Mexico defaults on its debt. And I'm getting all this attention. And I thought, I thought I was right, and I had this one big bet. I couldn't have been more wrong. That was the exact bottom of the stock market, August 1982, when Mexico defaults on its debt. We're married. My wife's here. Okay. I was so broke that I had to borrow $4,000 from my dad to pay for family bills. And this was painful. And it was maybe the best thing that ever happened in my life, because it gave me the fear, that I needed to balance with my audacity, so that I'd had to say, how do I know I'm right? And how? And so then I was faced with a choice. Like, I want big upside. I want my life to be as great as it possibly can be, and risk goes in proportion to the reward that you might get. So I had to think. I was thinking, do I want to go get a job? And I'm going to have to get put on a tie and go into the office on the train and all of that, or I'm going so I look at this risk. And the way I looked at the risk is I said, it's like I had a visual image that there's this jungle there. And if I can cross the jungle without getting killed to the other side, I would be okay. But I have to go through that, or I could stay on the safe life side and not take those risks. And how would I do that? And that was a problem that I had to figure out. And I realized two things I needed to do. I needed to diversify, because it's like my 15 uncorrelated return streams mantra. I realized that if I can have bets, 15 good uncorrelated return streams, that I could reduce my risk by 80% with keeping the same expected returns. So that was a big thing. And the other thing is I realized that I needed to do it with people who were on the mission, who could see what I couldn't see. I wanted people that we would stress test each other and challenge each other, and we all see differently. Each one of you, what you see is different from the way other people see. And when you start to have an appreciation of how people see things differently, and you can get through that, that's a great power. And so it was like going into the jungle with others who were on the same mission with me, and we protect each other and so on. And so from that point, we became very successful. And so it's this culture of radical truthfulness, meaningful work and meaningful relationships through radical truthfulness and radical transparency, because you've got to get a truth. And then systemizing. The thing that was very important to me was to have a game plan. And as we write down our criteria, so I used to write down, I still do this, I write down what are my principles for making a purchase or a sale or doing anything in life. It's become an everything in life type of thing. I recommend this to you. I recommend when you think about your decisions, everybody goes and they make decisions quickly. And they don't think enough about the criteria that they use to make decisions. And if you pause and you reflect on your criteria, when you're, what are they? Write them down. I found that I could systemize them, and I could backtest them, and I could see, oh, if I made these decisions this way, I know how it would have worked. And I could see how the machine works, because everything works like a machine. And so by doing that, we built game plans together. We stress tested each other, and we built these systems. So it's an expert system. We built expert systems. Artificial intelligence began in 1953, and it's taken various forms, and it has various forms, neural nets and expert systems and so on. We built these expert systems that looks at that. Now I have a game plan that I execute. So it's like we were talking about the 1930s and how that is. Well, if you understand how the machine works, then you can build those and then take diversified bets. So those were the things. And so risk control was very most important. And think of it this way. If you lose half, you have to, if you lose 50% of your money, you have to make 100% to get back. So there, you have to start with what is the amount you can lose. And I said to myself, I never want to lose a third. And in my, so in the 33-year history of managing money, up until COVID, the worst year we had was 7.9. We made money in 30, I think it was 30 of the 33 years, averaged about 11 or 12%, and never had a loss that was greater than 7.9%. COVID, we had a 12% loss, and our returns were uncorrelated with other asset classes or other managers. And so we were a great asset for institutional investors. We made more money than any other hedge fund in existence, and we became bigger because that was our formula. So that was our formula. The humility, the culture of this, the systemization, and then building from what is a tolerable risk and backtesting and going, what is a tolerable risk, and that 15 uncorrelated return streams, those were the elements.
Yeah. Do you want to run I was going to run that little clip of you.
Great.
It was very funny. So I asked Ray, what was his biggest investment? You've already alluded to some of that. Your biggest investment mistake that you've made, what you learned from that. You've talked a little bit about that. But Steve, if you could run the second video, please.
Mr. Chairman, Mr. Mitchell, it's a great pleasure and a great honor to be able to appear before you in examination with what is going wrong with our economy. The economy is now flat, teetering on the brink of failure.
You were recently quoted in an article. You said, I can say this with absolute certainty.
This is on Wall Street Week.
Markets work.
I can say with absolute certainty that if you look at the liquidity base in the corporations and the world as a whole, that there's such a reduced level of liquidity that you can't return to an era of stagflation.
Wasn't I arrogant?
I was going to say...
Man, I was so arrogant, and I couldn't have been more wrong.
I didn't know that was you. I think you still have I mean, you're still a good-looking guy.
Watch it.
You have plausible deniability in there. So we then proceeded to have what? More stagflation than we've had in history.
I really learned there are lessons in pain. Pain plus reflection equals progress. This is like my mantra. That's how you learn. Ooh, that taught me humility.
All right. We talked a little bit before about artificial intelligence and the future of investing. As you said, you've been doing it already for, with expert networks since the beginning in Bridgewater. Could you talk a little bit about that, how you see that shaping the investment future? You see AI, I mean, we were actually talking with some of my colleagues who were here. We were throwing around some emails, and I was looking at, what does AI say about the dividend model and dividend discount model in the S&P 500? And it gave a nice explanation, but there were all these very wacky numbers coming out of it. So I just wanted to get your views on. I know you're very interested in that. You've been using it for a while. So where do you see it sort of currently? Is it being used? I mean, people have been sort of using a form of it, but now I think there's more of an advanced form, but could you give us your views on how you see that shaping the investment industry? Where will it be a support? What happens when the AI model tells you, I mean, you're very intuitive, you look at cycles. We were talking about this before. What happens when the AI model tells you to do X and you're like, this doesn't make sense? How do you reconcile that? Some of those ideas. It's a lot of questions.
Most importantly, it has to be a partner. So the way I built the systems is like building a computer chess game. I apply my criteria to it. It executes. I want to execute. We look together at what's happening. If there's a difference in what's happening, I examine why. I would say if there's a difference, 2/3 of the time, it's right and I'm wrong because the brain is limited in its ability to deal with many complexities of many markets and so on in that game plan. Well, on the continuation of this, okay, we will think differently, greatly differently, but that has to make sense. So for example, when we think about inflation and the Federal Reserve targets inflation, it's only because our brains are limited that we use this one number as an average of all things, where in reality, it's all of these transactions that are happening every day. And when you start to see all these things transacting, which now we can do at a granular level, we can look at the world by the equivalent of the zip codes and all of that and everybody's individual transactions. The brain is limited in its capacity to do that. So it's a great partner. Oh, it's a great partner. But you cannot follow it. It hallucinates. It will continue to hallucinate. So you, as a partner, you have to make sense of it. In other words, it must explain itself, and to you, there's no reason you can't. Complex things can be explained, okay? And so I think that as we're doing it, it's one of those things where we have entered the realm, and I think long ago this is where our edge was, and I think it still is. We've entered the realm that the smart guy doing it all in his head, that looks like I don't know, like, you know, a sexy thing to do, and it's great, and that's not going to work, okay? So you have to work with the computer in that to try to achieve understanding and so on, and you have to have it as a partner. And how we will do that will be a platform, like I'm working on a platform that I'd like to make available for everybody to be able to, how do you make your decisions? How do you convert them into return streams? So everything in investment management is a return stream. In other words, if I make these decisions or I hold these betas, it's a return stream. How do I create what those right return streams are in combinations? These types of exercises, you can use this a lot. So it's a fabulous, fabulous tool but don't follow it.
Right. Gotcha. No, it also begs the question.
And also, just to add something that
I mean, we've been, as I said, we've been playing it's
discovered,
crazy. Some of the stuff
it's particularly problematic in the markets because if something is discovered, it's not valuable.
I was just going to say that. What if everybody in this room is, you know, graduates and everyone's using AI? Where is anybody's edge?
That's why you have to know.
It's like a race to the bottom.
It's actually sort of history's
like factor investing,
more.
Right?
Yeah, the history is more that I've found that everybody looks at what has worked, and when they discover that, it's worse, do the opposite of what's worse. So almost like what opposite of what has worked, and for that reason, you can't accept what has worked. Because the markets, if everybody's accepting, like merger arbitrage used to be a good example of that. I mean, I can go through many and I won't digress into them, but you know, they discover it and nobody's thinking of the logic. So you should be able, from a logic point of view, know, does that item, is that continuing or not continuing? Has it become overpriced or underpriced? You still have to think that way.
Yeah. I guess one question again pertaining to all the MBAs sitting in the room. What advice would you give them in terms of if aspiring financial professional, in terms of skills they need, values, personality traits, just based on your experiences? What would you tell them? What would you look for if you were interviewing them?
You're
would you
asking
ask
me a
them?
bunch of these. Okay, so I'll take them one at a time because they each have different answers.
I know, yeah.
I think you're about to begin your new phase of your life. And I think that you don't know what you're going after. It's a journey and it's going to have lots of surprises. And almost you have to think what's going to make you happy. I think you have to know your nature. There's a personality profile test that I made and put out called Principles You. I would suggest you might take it. It tells you something about your nature. But in other words, we all have our nature. Mine is like, I'm an adventurer. I'm curious. I have these things, but I'm also forgetful. And anyway, we have to know our nature and then find the path that suits our nature in whatever our career might be. And so you're going to go on that path, and you're going to learn, and then realize that the only way you're going to learn is by doing and having mistakes and experiencing and reflecting on those mistakes to learn that the power is in the mistakes and in the learning that comes. Don't bet on you knowing a lot now and being successful, because that's not right. And so as you go down there, so experiment, see what you like, what you don't like, make your journey and be humble and have that experience. If you go into the markets, okay, so I'm answering the question MBA, what's my path MBA, not just goes into investment markets. And that's why we get to what you look for, okay? In terms of going into, the investment markets, like play the game, whatever the size, when I could play at 12 and I took my caddying money, $50 at a time, and I put it in the markets. That's the beauty of the markets. Everybody can play the markets and as a game through the experience. Then get perspective and learn, okay, through that type of, and then most importantly, I would say, who are you with? Who are you going to be? Who are you going to be with? What is the type of place? Are you going to be a grunt following their instructions or so on? Or are you going to be able to have an idea meritocracy where you could ask questions? What is your development? Get a perspective, a broader perspective of the world, so you don't get too narrow as you're starting off and you're going to say, I'm going to get into that specialty. And then as you're going along, say, do I like it? So I would say, make your work and your passion the same thing, and don't forget about the money part. But don't make the money part, don't lose sight of what is money for. I didn't try to make a lot of money. I could have just as easily played another game. It happened to be the game that I played, because you have to think about, like, what is your life? What does that mean? And so, but money is a good thing when you start to have to take care of your family, or you want freedom. So, but don't make that, you have to still come back. Money has no intrinsic value. It only has the value of what it's going to get you. So keep thinking about what it's going to get you that's important. And I think that adventure, that experiences, that curiosity, if you have it, whatever your hunger is, make sure you satisfy your hunger.
Is there a person or a book, or is there something in your life that you would say has had the biggest impact on you? I know I think you've credited transcendental meditation for some of your success, or a lot of your success. Maybe we should teach it here at Columbia.
Yes.
As a course.
No doubt.
What are your thoughts? Is there a person, or would you say it's TM?
I was there's a few things that happened that I was very lucky to stumble across. I touched on thinking about principles. My decision making is writing it down, systemizing. I'm all of those. There's a journal I put out that will help you write down your principles and do that. That was very valuable. But I would say the thing that affected me more than anything was transcendental meditation, because it gives those who meditate an equanimity. I'll explain how it mechanically works. But it gives you an equanimity, in other words, a calm centeredness that allows you to deal with reality, understand reality in kind of an objective, calm way. So there's a word, a mantra, that they call it. An example might be Om, and when you repeat it in your mind, Om, you can't think. You can't think about other thoughts because this is occupying your mind. And when you do that over and over again, it disappears. And you transcend into a subconscious state in varying degrees, depending on how much you do this. And in that subconscious state, that's where most of our decision makings are made, in the subconscious, the emotions, the intuitions, all of that are in that subconscious state. And so it's very relaxing. It gives you that, and then you then transcend up. And that practice gives you then that equanimity to kind of look at the whole. It's almost like you're going above yourself and you're looking down, and there's Ray in his situation, and how does that work? And what is Ray like? And like if you could be objective of what you're like, your strengths and weaknesses,
Yes,
and your
yes.
work, how should the machine work? Who should he work with to make it work? All of that comes from meditation.
Yeah, I actually do it myself, which I find very helpful. That's one of the reasons I brought it up, and I know you're a big fan of it. So,
And it's also healthy.
yes.
Oh, the amount of
Sorry, go ahead.
stress reduction and its impact, it's very good.
Yes. I'm sorry. Something's going off in my
Better you than me.
Oh, thank you. I couldn't find it. Sorry. Lastly, I wanted to focus a little bit on your endeavor, on your philanthropic endeavors, Dalio Philanthropy. So it's fascinating to me. Most people are, I would say, like Elon Musk. They're going up and looking at space, and you're a big fan of going down in terms of looking at the oceans with Ocean Explorer. Could you talk a little bit about that? Why do you see that is so important? Why are you focused on the ocean as opposed to?
Well, I'll get to the ocean in a second. I think that one of the things, you accumulate wealth, and when you accumulate wealth, you have to say, what are you going to do with your wealth? And it can be decadent, and it could be also like if you're raising kids, and so on. Having too much wealth can be as bad as having not enough wealth to take care of the basics in terms of those things. And then empathy. I was lucky to be raised in this country. And so we have this family foundation that is passion-driven, because I start to think, what do I want to devote resources to? We give about 400 grants a year to a variety of things, but we have themes in our passion. My wife, Barbara, her passion is to help the most poor performing, what are called disengaged and disconnected high school students who grow up in these neighborhoods that are very terrible, the drugs and the poverty and the conditions, and that's her passion, and it becomes ours. And so we share the fact that we've been blessed, and we want to create better opportunity, and we each do it in our way. And then for me, when I grew up, I used to watch Jacques Cousteau, and got excited about ocean exploration. And then I learned to dive. And then I did this exploration. Then one of our sons, all my sons, I learned to dive. They learned to dive with me. And then got to the point where we could get a ship. It's not a yacht. Ocean X is the name of it. If you want to go online, go see it. It has a laboratory, we wanted to support ocean exploration. Because to me, the ocean accounts for 72% of the world's surface. And the highest point on land is equal to the greatest distance, 11,000 meters, up or down. And so it's twice the size of all land combined, and it's totally unexplored. So imagine that if you had continents that were totally unexplored, you have to explore it. And it's the most important asset we have. It has all sorts of effects on us. And it's not explored, and it's very exciting. Because, like, if you want to see alien creatures, you're not going to see them up there. You're going to see them down underneath. So that's a passion that, so we do not only the supporting exploration, my son and I particularly were sort of partnering on this. And not only supporting that, but we support museum exhibitions and those kinds of things. Because to me, okay, space exploration, I guess that's cool, but ocean exploration, cost effectively, 120 times as much money goes to space exploration as ocean exploration, roughly. And the cost per mission is much greater there than going down. And it has, to me, a much bigger impact. So for all those reasons, that's a passion of mine. And that's what a big thing I do. But we do a lot more, like Barbara has her passions, which I share, and then we do a lot more of other things, which is a joy, in this life cycle, because you leave with nothing.
Yeah. I'm going to ask you one last question, and then we're going to open it up to audience questions. So I can't resist this, but on your LinkedIn page, I didn't tell you I was going to ask you. It says that you went to Burning Man. Would you do it again?
Yeah, Burning Man was cool. Yeah, if you haven't gone to Burning Man, I can go to all the reasons. It's like this total freedom, love fest, self-sufficiency, everybody helping each other, fabulous experiences in art and whatever, and all sorts of, I don't know, whatever experiences you want. They got them. So it's total freedom, and yeah, it was great music. Loved it.
Great. I hope to go this year. So. That wasn't for my students. All right. Why don't we do this? Let's open it up to questions. We have about 15, 20 minutes or so. So one of the things, just given we have a limited amount of time, and I'm sure there's a lot of questions, if people would try to keep their questions short and to the point, and that would be great. If we want to go around, I think we have a question right here.
Hi, thank you so much for coming here. I really learned a lot and really inspired. So since you mentioned about the Chinese housing market and the bubble here right now in the Chinese housing market, I was wondering how do you see the future of it, and how the policies as you talk to the Chinese president, how the policies will, in your opinion, affect the housing market in the future?
I think you're particularly talking about the debt and the economic, financial, okay. I'm going to answer that question, then also say that there are other factors that enter into the particular picture, and they're doing well. It's a classic cycle, comparable to what you saw on the video. When things go up, when real estate goes up, and there's the desire to save, it's logical to put money into real estate. And then when money goes into real estate, then you have so much of the economy going into real estate to build the real estate. And so it becomes a bubble. So people are owning more apartments than they're living in. And as Xi Jinping said, apartments are meant to live in, they're not meant to speculate on. And you create this bubble. And then the bubble bursts. And I've been involved with, actually, very closely, the people who are managing these situations. And what you need is a debt restructuring. And what I call the beautiful deleveraging. That, in other words, some way or another, you have to get the debt burdens down because you're having the domino effects. Not only the real estate, but then that has a negative wealth effect because people who have that 70% of all savings is in real estate. They lose money in real estate, so they lose money. And then they spend less, and then it has its domino effect. So you have to get that down. So what they need is a debt restructuring and a beautifully engineered deleveraging, which I won't digress into an explanation of now. But by the way, also I put the book free if you're interested. Principles for Navigating Big Debt Crises. They're looked at all the big debt crises over the last 100 years, and there's an explanation of how to do the debt restructuring, which I call a beautiful deleveraging. But that's what they need to do, and I think they're getting closer to doing it.
Great.
Hi, thank you for your time. My question is, do you believe there's an actual currency currently challenging the US dollar as the global currency? And if yes, which one would that be? Is there any realistic heir to the throne?
No. I think we are entering an era where all currencies are going to be bad. And it's an ugly contest. In other words, is it the euro? Is it the yen? Is it the renminbi? Okay. Is it gold? Gold is a currency. Is it Bitcoin? Okay. There's going to be a void, in my opinion, because of this nature of this debt. Debt is currency. If you're holding a currency, you're holding a debt instrument. And so, given the dynamic that we talked about, we have a debt problem, I believe, here. And so the question is, what is an alternative? A currency is a medium of exchange or a storehold of wealth. I think the dollar will remain a medium of exchange, but it won't be effective as a storehold of wealth. And so that's where we think, okay, what are the elements of a storehold of wealth? Well, one of the elements of a storehold of wealth is that you have to be able to transfer it to somebody in another country who will accept it. So it's got to move around, okay? So it's not a storehold, a currency is not real estate. Oh, so how do you and what will be accepted all around the world is, so that is what the question is going to be, I think. I think gold will stand as the best of that, but Bitcoin and others are going to, what are their issues? And we will be in a void as to what that is, because the basic problem is that you can't trust central bankers. I mean, they're all in a bind. They all have too much debt. They all have that bind. So who's going to withstand it? They compete with each other. When one devalues, if the dollar devalues, the others are going to want to devalue because they're going to be uncompetitive. So I think that's the nature of our circumstances.
Hi there. Hi. Thank you for sharing today.
Yeah, hi.
I think in your on your LinkedIn post, you shared that when you were young, you were looking for a lot of challenges, and you go to do this challenge with your friends, people who you look up to, and I'm sure after you complete those challenges, you hike the peak, as you describe it. Those challenges and goals might become meaningless. So these goals are transient. My question is, how do you find a goal that could be meaningful in the long term? And what advice do you have for us to find our own goals and purpose, maybe?
What you will find out is that your goals and what satisfies you are going to change through your phases of your life. So there isn't going to be the one goal. You're going to see at different stages. So, for example, at my stage in life, I don't want any more success or building things. I want to pass along things. So I think you're going to find that. How do you find it? It's like, how do you find the food you like to eat or something? You experiment, you taste it, you see how it's rewarding. Hopefully you look at it from the higher level where is it bringing you the things you want? So the satisfaction of the career and so on. But those things are going to evolve. So the things that you're going to want when you're 20 is different than when you're 30 and when you're 40. So it's going to evolve. Just know your nature, go with it, enjoy it, think about it.
Hi, Ray. Question. Does your study of empires in cycles over history indicate that the former winner always becomes the loser? In other words, is this a fixed pie scenario? And can you comment on the varying degrees of violence and destruction through a transition?
Yeah, there were 3 questions in there. I'll try to deal with with them and remember each one of them if I forgot. Every empire through history has failed, and it for various reasons. Like companies, almost all companies have failed because of a combination of maybe they get more decadent, maybe they lose their competitiveness, something better comes along, and then the classic reasons that we're talking about. But but the timing of when that happens and how it happens varies. But like a human's health, you can look at an economy's health or a country's health by a number of measures, and they're in the book or they're in the video. Do you have good education? Are people civil with each other? These basic kind of corruption. Do you have corruption or no corruption? All of those things are indicators, leading indicators of how a country will do. I've created them into indicators of how each country will do for the next 10 years. They're indicators. They're not perfect, but they're good indicators of health. So yes, they all happen, and you should know what makes health and what it makes unhealthy situations. So they happen, but the question is when, and you should know what the health measures are. I've answered your first of your third question. Tell me what I'm missing.
How bad is the destruction when a winner becomes a loser? And is it always a fixed pie?
It's not a fixed pie. And like Graham Mallison wrote in his book of the Thucydides Trap, which I think is a good summary of this, it is the nature of things that as a country, as there's struggle of power, and the world doesn't have a world court to resolve decisions, that it is likely to have a fight over how things should be done. History has shown that through time, the great power conflict. What are the rules of the game? And so those elements are existing. So it is very much the case that wars have happened repeatedly for the same reasons over and over, and they happen roughly, every 100 years. They can vary. We had a war, the last one ended in 1945, and now we have this other period, but you have to look at them, and they just keep always happening for the same reasons. So in answer to your question, it is likely that they will be painful and difficult, nothing's certain. There are certain better ways of handling them than that. Like we were lucky, I suppose, in that in Russia, Soviet Union was never an economic power, but it was a military power. But the fear of mutually assured destruction stayed in the way of what could have been a problem. We have equal powers, roughly, in the United States, China, and the power to in other countries, powers to destroy each other in many ways are advanced like all technologies. And we have a situation where this is a game. If you watch the movie Oppenheimer, I think it was a good flashback for what existed and what's going on now. In particular, the development of a weapon that if you show it to the other side, they don't want to fight, so that they submit, is going on. Okay, that's the game. And then you see almost this populism, this McCarthyism that's taking place on which side are you on type of question, very much like today. Both of those things are very much like today. That's the nature of the dynamic. So, yeah, you have to, concern yourself and can't be naive, like just because we never had a war in our lifetime, we'll never have it, or just then, So that's the pattern. You can, with wisdom, and even a country can decline gracefully. Great Britain declined gracefully. So there's the possibility of a graceful decline.
Evening, Ray. Thank you for being here, right here. So in your perspective on the refining nature of failure, what did you lean into to make sure that failure didn't lead to decision-making paralysis and a zero-risk aversion, and kept allowing you to respect failure for what it does to refine you without it preventing you from making decisions and moving forward in risk?
Well, it's just the alternative looks so bad. Like, okay, if I'm going to get paralysis, like if my choice is paralysis or no paralysis, I'm going to choose no paralysis, right? I have to be an adventurer if I'm going to have to succeed. It's like being on the edge of the jungle and wanting to know, that jungle story, like I want to have the best life I possibly can. So, but also meditation, when you have the paralysis, that's an emotional reaction probably, the fear and paralysis. And if you can get away from the emotional reactions that hurt you, hurt the actions that you're taking, that's going to be an important thing. So meditation to some extent. Also, working well with others who care about you and you care about on that mission is an important thing. If you're in paralysis and you have others who sort of help you through that and that you can rely on, that's an important thing. So you can get past the paralysis, but you have to get past the paralysis because the alternative is just so bad.
Do we have time for one more question or two more or no? Do you have a question, Michael? Oh, one more question. Anybody? Yep, up here on the left. Oh, have a.
Thank you. Serious question. You posted on Instagram a couple weeks ago that Taylor Swift should run for president. Who do you think should be her VP, and how would you advise her to become successful?
I'm really seriously thinking of this. What I saw at the concert, and what is the bringing of people from all over the world together, like these people could not go outside and fight with each other. And I think that bringing people together is it's like the most important thing right now. I mean, so important. What I would do is I'd advise her to run for president. Don't quote me on this. This is a joke. This is a joke, but a joke is a half-truth. So, and get good advisors. But bring there was something special. And we really have to look at that quality, I think, in our leaders.
That's great. Thank you so much. Thank you.